All right, guys and gals, welcome back. Welcome back. Fantastic job today. Way to go. Now we got CPI coming in tomorrow morning. Nobody knows what that CPI report will be tomorrow morning. Nobody knows how the market reacts to that CPI report tomorrow morning. One thing we do know, though, is anytime we have a big news event like tomorrow morning, there are 4 specific trades I track for tomorrow. One thing I do know is by the time we're done this video, you'll have an easy roadmap to make some money on CPI no matter what the market throws at us on Wednesday morning. Now, before we jump in, though, to my favorite trades here for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting our channel. Not for the intro, though, huh? Let's get ready for CPI Wednesday. Boy, oh boy, I'm getting excited just thinking about it here tonight. NASDAQ triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have 3 important clues right now on these charts that are telling us where the best winning trades are going to be on CPI Wednesday. One of those clues is right here on the 60-minute time frame. You can easily see we are bullish overall on the 60-minute S&P, bullish overall here on the 60-minute to NASDAQ. I like to use the 60-minute charts to give us that overall directional bias. It tells us that long-term momentum and where the odds are stacked in our favor for tomorrow. But the 60-minute chart does not tell us entries. The 60-minute chart does not give us levels of support and resistance. We need a lot more than just this overall direction. I have 2 more important clues that will tell us where the best entries, the best exits, and time of the entries are going to be for tomorrow. Let's check our schedule for tomorrow. Before we dive in, talk about entries for tomorrow. Let's check schedule for tomorrow because you probably know this already, but there's, just in case you don't, there's 2 news events coming out, 8:30 Eastern Time. The CPI report, of course, is the big headline news. Now, again, anytime we have a big news event like this, nobody knows what the reaction will be. Nobody knows what that number will be tomorrow morning. So our job is a bit difficult tonight, but that's okay, though, because anytime we have a big news like this, there's 4 different trade setups, 4 situations we're going to make sure we are ready for tomorrow. That's pretty much the only news going to worry about tomorrow morning, 8:30 Eastern Time for that CPI report. Back to our charts, though, because we know what the news is, but the money is made, right? The money is made on these charts. Let's now cover those 4 different scenarios. We'll start first on the S&P SPY, and we'll wrap things up in the NASDAQ and the triple Qs. I mentioned earlier, the 60-minute chart is very, very good at giving us the long-term direction, but it's not very good at timing the entries. We like to use tick charts to time the entries. This is a 7,000 tick chart. We trade tick charts pretty much all day long in our trade room. 7,000 tick chart linked up there, upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week. Now, couple more clues here on this tick chart. You'll notice that range right in the middle. Now, you know me, I love ranges, right? Bullish market into a trading range and a very strong breakout going higher. Now, in normal situations, I would say we're looking for a 2-legged pullback, a breakout pullback, and a retest of that high. In most situations, whenever I have a range breakout like this, it's a 2-legged pullback, a bit more than a measured move into that breakout pullback zone and a retest of that high. Usually what happens is the size of that breakout leg becomes a measuring leg, and that gives us a target up overhead here for tomorrow. But again, we're not in the usual situation for tomorrow. We have a CPI report tomorrow morning. We have to expect we're going to get some big news spike, right? We're going to either spike up going higher or spike down going lower. We hope the market spikes down. So why don't we start first with the spike down? There are 2 specific trade setups I'm looking for if we spike down. If we spike higher, you got it. There are 2 specific trades I'm watching if we spike higher. I'm going to cover spiking higher a bit later on in the video on the NASDAQ. And the first, though, let's cover that spike going lower here, because in all reality, we're bullish. We'd love to buy nice and low. Now, if we get that spike running lower, The challenge is that whenever we see a strong shot down, we always expect this to pull back and want to retest that low. It could be here. I don't know exactly how far that spike down will go. What I do know, though, is if we spike down, there's one specific type of kind of scenario, entry pattern I'm looking for. It's a failure into trap pattern. For example, if we spike down, remember, I don't know how far that move will go, right? I don't have a crystal ball on this, especially during a major news event. However, what I do know, though, is we're an overall bull market. And so as we spike down, I would love to trap in some rookie sellers who are trying to chase this market going lower and use what we call a failure pattern. I'm not going to pick a bottom on this. I'm not going to blindly buy into it. We're overall bullish, though. So we spike down. I don't want to pick the bottom. I want to trap in those bears, rookie bears, we assume, chasing this market going lower. Once those bears are committed, now we got them. Now we know where the stops are. If you're stuck short and you get stopped out, what happens? You have to buy your way out of that move. That's a failure pattern. The follow-up trade on this, very careful, pay attention here. As we go higher now, it's always going to be what we call a trap pattern. In this case, it's called a bear trap pattern. It's a higher high in price and a trap right below that low. This is one of the sequences we're tracking for tomorrow if we get that strong shot lower. Again, it could be here, I don't know, it could be anywhere down here. I don't know how far it will go. What I do know, though, is once we pull back to that moving average, trap in those rookie bears, let them try twice, and squeeze those stops running higher. Now, where's the market want to go? The market wants to go back up and take out that high. It's a bull market. It wants to go back up to retest the high. On the way back to that high, keep an eye out for that run up, that higher high in price, and that trap right below that low. Again, we call these trap patterns in our free video course. It's a failure into trap combination. Now, be aware of this because sometimes, like I said earlier, if this thing really runs lower, we oftentimes will get that failure. We'll get the pop back up, but it won't keep going. We'll get the pop back up. It might hold the underbelly of that range. And again, because of all that momentum going lower, be prepared. The bears may come in and retest that low. This is another bite at the apple. And oftentimes, guys, this one is the most lucrative option of the sequence. Anybody who sold short right there, they're taking their profit back at that low. Rookies will come in once again. They always do. 1, 2, again, think about that failure. Now, why twos? Because again, I can't pick the bottom. I don't know how far it will go. It may keep going a bit more and then pop up. So I'm not going to make that rookie mistake and pick the bottom on this. I'm going to wait for bears to try a couple times, squeeze those stops. And again, what was the follow-up pattern? It was a failure into you got it. It's that bear trap, that higher high in price and that move right below that low. So do not confuse this with a reversal, right? A lot of times it'll run down. We'll get that 2-try failure. We'll get a winning trade out of it. We'll get the 1-to-1, get that stop up to point of entry. But for whatever reason, the strength of that move down, they roll it over, retest, and we do it again. 1 try for the bears, 2 try for the bears, squeeze those stops. I love these double bottom, of course, into that bear trap pattern going higher here. Now, one more variation of this, right? Like we saw today. Today, we may get that run back down. I love the idea of 1, 2 back up again, but what happened today, right? It V-bottomed off of that low. These are tricky. These are tricky, especially on the emotions. If we run lower and we V-bottom, all you do is once it begins to grind going higher like that, like over here, all you do is draw a trend line off the high, like over there, right? Draw a trend line off that low, like over there, right? And once it begins to pull back, I want that first test off that low. This is exactly what happened this afternoon, right? Pops up, pulls back. No wonder why everybody bought off the low of that channel. These are called V-bottom reversals. Yes, I do want to drive this market lower, trap those bears in and squeeze those stops back up again. But you know what? Again, sometimes the market doesn't give us that. If it V-bottoms off that low, the hardest part about these is don't chase it, right? Don't chase it as it goes higher, because if you're anything like me, that little voice in your head is going to say, come on, Come on, get in. You're missing this thing, man. Well, don't listen to that voice in your head. Find that new high, mark off that low, and you want any of the entry patterns. It could be a failure pattern. It could be a bear trap pattern. It could be a pullback combination. If we're lucky, a strength trade, right? This will all make a lot more sense if you guys are going through my free video course. Now, which reminds me, let's slow down for a second, because if you're watching for the first time right now, this might be a brand new language for you. I know most people watching right now, you know failures, you know traps, you know why I love range rotations, you're making money with this stuff on your own, but this might be brand new to you. I look at things a bit differently here on this YouTube channel. If you're here for the first time right now, I teach all these entry patterns. I have hundreds of examples of V bottoms, failure patterns, trap combinations, double bottom reversals. I teach all this in a lot more detail. I'll put a link up top there for you in the upper right hand corner. Grab that link that popped up there and take that free trading course, because the strategy you're going to learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then of course, I want to help you start making money on your own. I'm going to teach you 4 of my favorite entry patterns. You'll learn failures, traps, and a whole lot more. It's all included in that free video course linked up there in the right hand corner. Guys, the markets are way too good right now if you're not making consistent money, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. Perfect for someone trying to make the jump into full-time trading, because that video series will teach you a simple roadmap we use. You'll always know where the best winning trades are going to be each day. Also be aware too, I'm going to put all the important links in the description of the YouTube video. Put the free class links down there for sure. We trade together every day in our trade room. I'll put trade room membership links down there as well. And if you're on Twitter or X, I post a lot of updates throughout the day on Twitter and X. If you're on Twitter X, give me a follow. I'll put all the important details there in the description of the YouTube video. But at least that way now, if you're new here for the first time today, I want you to learn with that free video course how we do things every day in our trade room and make things a whole lot easier. Start making money on your own. Now, there's one more scenario I want to talk about on the S&P, and then we'll talk about if we end up spiking higher here tomorrow as well. What may happen is we may spike down and go sideways into a trading range. In all reality, this is one of the easiest scenarios to make money. Now, we're an overall bull market. Keep it in mind, overall bull market. And what do we know about ranges? Ranges are magnets, and they love to rotate back and forth like a pendulum swing, right? We measure the amount below, the amount above, we rotate back and forth. We talked about this, of course, last night on the video. So if we roll lower and we start going sideways here into a trading range, the key is, at least my favorite trade, is we call a slingshot reversal. It's basically a bear trap underneath that trading range. If we see a range here, look for the market to go through the low of that range. This would be kind of an oversold or overextended territory here. Then look for that same 1 try, 2 try, trap those bears in, look for that failure into, you guessed it, that bear trap combination. This situation though, or this is now applied inside of that trading range, right? So again, ranges act like magnets. So we go below the range. We're an overall bull market. So again, I'm not going to pick the bottom down there. I'm not going to blindly buy down there. But once I see rookie bears, these are only rookies down here. Professionals would never sell below a range like that. Once those rookie bears try twice though, now we got you. Now you're trapped. And now if those bears get stopped out, the market now will squeeze back up. And again, we know that ranges love to rotate. So it's that failure pattern below, it's that bear trap pattern, and we know where the market wants to go from there. Now, if we're really lucky for tomorrow, we'll get that run down. We'll go into some trading range down here. We'll get that fake out breakout off the low. I call these slingshots because they oftentimes slingshot back in the opposite direction. If we're lucky here, we'll get that strong run, because again, we're overall bullish. The minute that we start to break through that pendulum, okay, the pendulum swing on the other side is a big clue. If we can get through that pendulum swing, right, some conviction through that pendulum swing, now what I can do is I can now begin to look for a breakout pullback, okay? The top of that trading range now becomes our best friend. I will look for that two-legged pullback. That two-legged pullback, don't pick the bottom on this. Do it again. 1, 2, failure. Trap those bears into that bear trap combination going higher. This would be kind of a dream scenario for us buyers tomorrow morning inside the trade room. So a kind of second scenario, if we do spike down and go into that trading range, again, look for that bear trap. Again, it's a failure pattern, a technical failure pattern, which we learn in the free video course. Look for that bear trap, that failure pattern, 2 tries. And again, if this thing just squeezes or slingshots off that low, we call it in the trade room, if we start seeing this thing push right on through that pendulum swing, now you know, again, overall bull market. So now buy that breakout pullback. And when I think about a breakout pullback, I think about a 2-legged pullback, 1, 2, a bit more than a measured move. But the bottom line is I want to use the top of that trading range as an area of support. Don't pick the bottom, failure into bear trap combo, and leave that runner right back up to retest the high. All right, so now I think we're ready here now if the market goes lower. We know how to trade this, the run down, the double bottom. We know how to trade that pop and grind or that V bottom. We know how to trade stuff like that if we spike down. Now let's cover the more difficult scenario, right? If we do end up spiking higher, let's go to the NASDAQ here on this one. Obviously, NASDAQ and the S&P are very, very similar. So everything we talk about tonight on the NASDAQ can easily be applied to the S&P as well. NASDAQ is very bullish overall after that beautiful PPI squeeze we talked about last night on the video. But again, we're not going to trade off a 60-minute time frame. We'll trade off a tick chart. This is a 4,000 tick chart on the NASDAQ. A little bit lower volume in the NASDAQ, so that's why a bit of a lower time frame there. Same basic idea, right? It's a bull market right now into a trading range. We have a breakout, and in most cases I'm looking for that 2-legged pullback and a retest of the high, right? But again, tomorrow is not most situations, right? Tomorrow, of course, is a big news day. We talked about if we get that run down, we talked about the game plan if we do spike going lower here on the NASDAQ, or mentioned that, of course, on the S&P. So same game plan on the NASDAQ. Now, if we spike higher, if we spike higher, what's my problem up here? My problem now is I'm way, way, way high up, right? That's my problem. If we spike higher, I don't want to buy very high. Now, in our trade room, we have a kind of a setup called a big move setup. Anytime we see a big move in one direction, we know to expect what? You probably know the answer to this one already if you watch these videos a lot. Anytime we see a big move in one direction, we don't want to buy high. We want to buy nice and low. How do you buy nice and low? You buy a 2-legged pullback. Now again, a 2-legged pullback, when I think 2-legged pullback, I want to get underneath that moving average and think about that measured move, right? An A, B, C, D. It's a bit more than a measured move. Now, I would love to think we'll pull right back to the top of that trading range for a breakout pullback, but let's be realistic. Tomorrow's CPI report, I'm doing my best right now to illustrate this, but this may be a very, it may be a very substantial, run higher. So the goal will be is to get that 2-legged pullback, and that will usually give us roughly the idea of where to buy, right? I wish I had more of a crystal ball right now, but that's the game plan for tomorrow. If it spikes up, don't buy high, wait to buy low. And when I think about buying low, 2-legged pullback. And once again, we're not going to pick the bottom on this because for all I know, it'll keep on going, right? So I'm not going to do that. I'm going to wait for it to pull back, trap those bears in, get that failure into bear trap combination, and we know we're going back up to retest the high. So if I do see that strong spike going higher, it's not sexy, it's not interesting. I know it's the same basic idea, but guys, once you learn what works, you're going to keep on milking that cow, right, every day. So big move up, don't buy high, buy that 2-legged pullback. And what I'll do tomorrow is I'll go out and look for some bigger channels up here, find some larger channels, and so we can find entries off the low of that channel. We'll do that together tomorrow morning, of course, in our trade room. But buy that 2-legged pullback, right, that failure pattern into that bear trap combo and back up to retest that high. Now, one thing you want to think about too is if we do end up rolling higher and we go into a trading range, we mentioned earlier that ranges act like magnets and ranges love to rotate. So what we're going to do is if we end up going into a trading range after a big move higher, that range acts like a magnet. Now, we talk a lot more about this, keep in mind, in the free video course, but simply put, you want to find levels of support underneath that range, want to wait for that breakdown, don't pick the bottom, and do not chase it lower, whatever you do. It's a bull market, the short term and the long term. Wait for that pullback, and once again, get those bears trapped in and grab that failure into pullback or failure into bear trap combination. Now, this could be a very easy winning trade tomorrow morning because, again, if we go sideways in a range, that range is a magnet. The amount below the range, the amount above the range, we now know exactly where to take our profit. What I always do is take half off at the top of that trading range, right? Half off, top of the range, usually a quarter off a trend line up here somewhere, the trend line off that high, a quarter off right there, and then final quarter leaving it on that runner for that pendulum going higher there. So same basic idea, right? If a range happens here, it's the same thing. Buy support underneath that trading range. And when I say buy support, don't pick the bottom, trap the bears in, use those failures, use those trap combinations, and rotate that sucker, squeeze those stops, and rotate back going higher. Now, one thing you want to keep in mind here is the fake out breakout. This is the one that will fool you tomorrow. So I've said the best for last year tonight. I reward you guys for sticking around all the way to the end. Range. The easy money is the breakdown, the failure, and back up. But you know these markets are not going to always make it easy. A lot of times what happens is they will break above that trading range and then will rip right back down. Now, how could you sell that? How would you sell a fake out breakout off the high? Well, last time we talked about a crown reversal pattern. Crown reversals are the best way to pick that top. Crown reversals, if you put together a failure pattern with a bull trap pattern, this is short I'm looking for off that high. It's basically buyers once, buyers twice for a failure pattern, but it's a bull trap pattern, right? Because it's above that prior high. Again, a crown reversal pattern will be the best way for me to short on a fake out breakout off of that trading range. Now remember, we're overall bullish. So these types of trades, these are quarter size positions, half size positions. They're not a full size position because they're not going to be as reliable. We have a lot of examples of crown reversals inside the free video course when you guys log into the trial section of the website. So make sure you guys check that out. Now remember, the key to this is that ranges love to rotate. This is where I'm going with this. If we go up above that high, now we know where that support level is now down below. We take our profit on the crown reversal short off the high, and again, we look for that same failure. 1, 2, especially in these situations, because oftentimes that I mentioned earlier that slingshot right on the S&P chart earlier here this evening. This momentum now turns very strong as it rotates back down again. So don't pick that bottom, trap those bears in, let them try a couple times, and you got it, right? Pull that string, run those stops, and then as you're trying to add to your position, or maybe jump in once again, it's that failure into bear trap pattern combination. So just be careful if it goes up into a trading range. Do not fall for that breakout pullback overhead. It needs to really cook, right? It has to really push out of that range here. If we get a big run going higher into a trading range, it's very unlikely. It's not impossible, but the odds aren't very good. A breakout higher stays going higher. Right? If it goes high, if we spike going higher and then tries again to break out higher, the odds are not very good for a successful breakout for the bulls because we're so high up. Watch that crown reversal, the bull trap, and the failure pattern combined, and then use the size of that move up, project that down below. These are oftentimes easy money trades when you learn how to trade rotation with us in our trade room or, of course, in our free video class. So failure into pullback or failure into trap combination, and you know where the market wants to go. That becomes that final target on the other side of that trading range. All right, guys, I'm getting excited thinking about this for tomorrow. CPI coming for tomorrow. That's the plan for CPI Wednesday. And don't forget, though, tomorrow morning, 8 o'clock Eastern time, the easiest way to start making money in these markets is come out and trade it with us every morning at the opening bell in our trade room. I'll put all the important links, the free class links. I would definitely start first with the free video course, learn the strategy, start making the money on your own. In the meantime here, any questions, comments, concerns, any trouble getting started, please don't be afraid to send us an email, call the office, or use live chat. We're always here to answer calls, answer questions, and help you guys get started. Be well, be nice to each other out there, and we'll see you guys next time. Adios, amigos. Bye for now.